Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is Thursday, February 10th. I hope you are doing well. Well, we've been waiting for this day to come. Didn't expect it to get here quite this soon. We are now out of the 3s and into the 4s. We had expected it to take a little bit longer for us to escalate this quickly. And here's what's happening. Mortgage News Daily has the national average at 4.02%. Y'all, based on today's sell-off in the bond market, that's a little optimistic compared to where we're actually quoting today. So most folks are going to be either there, if not a little bit higher, with regard to where rates are. So it seems like just a few weeks ago, we were looking at moving out of the 2s and into the 3s, and now we're out of the 3s and into the 4s. You have to go back to May of 2019 to find the last time that national average above 4%. So here's what's driving it. This morning, it's all about inflation. The consumer price index that came out this morning was expected to come in at 7.3%, which itself would have been a 40-year high. Came in at 7.5%. So actually a little bit worse than expectations. But when those expectations were already as bad as they were, beating it to the downside was not welcomed. It also wasn't welcomed by the Dow Jones. The Dow sold off today 526 points, closed at 35.2. That's still up a hair from last week at 35.1. But y'all, if you keep this in mind, 5 weeks ago, we were at 36,953. So we're down 1,700 points in just the last 5 weeks on the Dow. And inflation is the overriding concern. Y'all, folks know that the Fed is going to step in, and the higher inflation reads we get, the more likely they are to be more aggressive. And both stocks and bonds really don't like that outlook. Stocks don't like it because it suggests that the Fed is going to be very aggressively trying to slow down the economy. Well, that puts pain on earnings, and obviously their yields and returns are going to be diminished as a result. And the same is true of the bond market. You just don't want to hold a fixed income security with interest rates escalating and with inflation eating up a larger and larger share of it. So that's what's driving the market, y'all. I know it's not super great news, but it is good to know about it. As always, if you would like to get more information, you can reach me online at brycehomeloans.com. You can call me on my cell at 210-260-9660, or just look in your email for a video of this call. It'll be there, and you can feel free to forward that as needed. My Apply Now tab is on that email as well. Do appreciate all of you that have trusted me for this information and with your clients. I hope y'all stay blessed, stay safe. We'll talk to you next week.